Introducing our latest quantum computing chip, developed to learn and evolve like the natural world around us. Willow, from Google Quantum AI.
This might be the most important thing I'm going to say this decade. If you missed the early NVIDIA rally, there is a bigger opportunity you can potentially profit from right now. Google just made quantum computing real with their new Willow chip, which processes in 5 minutes what would take the fastest NVIDIA supercomputer 10 septillion years. That's basically longer than the universe is old for, so it's a really long period of time. So if you think you missed the AI boom, quantum computing is about to create an even bigger wave of opportunity for you. But be careful, not all quantum computing stocks are created equal. And that is why today I'm sharing my analysis of 6 companies that are leading the $850 billion quantum computing revolution. You learn exactly which companies are positioned to dominate this space, their finances, the specific indicators I use to evaluate their potential. So if you have a few minutes, stick around. For those of you short on time, here's the essence. While established tech giants like Google and NVIDIA are making significant strides, pure play quantum companies like IonQ have shown remarkable progress in commercialization. The sector is projected to grow at over 30% per year over the next 16 years. Just do the maths on that one alone, and then there'll be outliers that'll do double that, and you'll get to 1,000% growth fairly easily. Now, Winston, my trusty golden retriever, has of course helped me dig through countless research papers, drooled on them, eaten some of them. So he's bringing you this analysis. Of course, you should therefore always do your own DD and do your own risk management and all the other important things out there. But what's fascinating to me is how similar this feels to the early days of AI adoption. Except this time, we can position ourselves ahead of the curve. And if you want to learn how to spot those stock breakouts before they happen, because that's really what's allowing us to have these trades that are up 100% plus in a couple of weeks, then I have something really exciting for you. I've actually recorded a 30-minute masterclass that teaches you exactly how the legends on Wall Street for decades have been using 4 secrets to spot these breakouts. And I was very lucky. I happened to work in an investment bank and I learned what those rules were. And I'm going to share them with you. It's completely free of charge. All you got to do is literally leave this video right now, watch the masterclass. That'll be way more important than this, because without that information, what I'm about to share with you in terms of news isn't really going to be able to, you're not going to really be able to translate that into gains. So whatever you do, watch that first. And the link for that is down below in the description, felixfriends.org/getfree, felixfriends.org/getfree, because I want you to get free. Now, everyone's talking about quantum computing and nobody really understands what it means. So I had no freaking idea how to research it. It is fundamentally different from traditional computing. And I didn't really understand it. So what did I do? Well, I asked Winston here to create a brilliant analogy while we were playing fetch in the garden and got surprised by porcupines. And he said this: traditional computers work with bits, simple zeros and ones. That's basically the way they work. It's like yes or no, black or white. So it's like having someone walk through a maze, checking one path at a time. It's like left, right, left, right, left, right. Quantum computers, however, use something called qubits, which can be both zeros and ones simultaneously. That's kind of where he lost me. But imagine having infinite copies of yourself, checking every possible path through that maze at once. So it's a bit like Winston losing his tennis ball in the bushes and not sure which bush it is. And then if there were a million Winstons, you could sniff out every bush at the same time. That's basically what quantum computing is in golden retriever terms. And why are these marvelous big AI computers that everybody's building, the Metas, the Microsofts, the Amazons, the Elons, and so on? Yeah, they're very good at pattern recognition. But quantum computers can tackle mathematical problems, so real kind of rule-based problems that would take traditional computers thousands or millions or billions or trillions or septillions of years to solve. So let's look at 4 applications here so we really understand what's going to happen here. Say drug discovery. AI can predict protein structures, but quantum computers can perfectly simulate molecular interactions, potentially discovering breakthrough treatments that classical methods will miss. And it can do that in seconds. Second, financial modeling. Yay, that's what we do, right? AI is great at predicting trends. And we see that, we built an AI trend indicator inside our app, which is called tradevision.io. If you haven't checked it out yet, there is a week's trial to it, and it's super cool. It works particularly well on the big stocks. But quantum computers can instantly analyze millions, gazillions of scenarios. And it could therefore handle risk management at a level that no one's ever done before. And then we have cybersecurity. AI detects threats, but quantum computing could create and break unbreakable encryption systems. And what does that mean? Well, it means that all cybersecurity is going to have to go on quantum computing, right? Because we can break it. We can break all of it. We could mine all the Bitcoins in a couple of seconds. It's just mind-boggling what this can do. It could crack all your wallet passwords if you're into crypto in a matter of seconds. So it is going to change everything. So your defenses will, of course, also have to be on quantum. Now, there was a fourth one there, and that was about climate change, and I decided to skip that one because, well, let's not get into that subject. Half the audience is going to go, what? He's a climate change denier. And no, I'm just saying that climate always changes, but that's a different story. And in terms of numbers, we're looking at an 850 billion market by 2040. So just like in the early days of AI, before ChatGPT, quantum computing is in this inflection point. Major tech companies are racing for quantum supremacy, and the winner will take all and reshape the industry like NVIDIA is. So the debate is over that quantum computing is going to change computing as we know it. And with that said, let's examine the companies that are leading this revolution. Let's start with IonQ, a pure play quantum computing company that's making quite a lot of waves. Think of them as a sort of the Tesla of quantum computing. Now let's look at their scorecard. Cash flow is a C. Growth is a D. Price momentum is an A. So the stock's gone up a lot. Profit health is an F for fail. And relative value is in D, which isn't terrible. So why do we look at a company like that? Well, they've created a quantum computer that can process 35 qubits. In simple terms, it's like having 35 superpowered processors that can solve problems simultaneously. So to put that into perspective, it's like having tens of billions of analysts working on your problem in parallel. Yeah, tens of billions of people. So it's insane. And what's even better? Well, their tech isn't just sitting in a lab. It's actually available on major cloud platforms like Amazon and Microsoft and Google. And companies like Airbus are already using this very technology. And why do I disregard the scorecard scores? Because growth companies don't comply with the traditional metrics of Wall Street of, are they profitable? Brilliant. What are the margins? No, they're building stuff. But their revenue is growing at 90% a year, which is very, very healthy. And they actually have a pretty good gross margin as well. So they're definitely doing something right. So what's the fly in the ointment? Well, they're spending massive amount of money on R&D. So they're burning cash to stay ahead. So this is a high risk, high reward play. And if you want to trade it, well, let's have a look at the chart here. So in Trade Vision, I'm going to type in IonQ here, pull up the chart for you. And what do you see? Well, you see this ginormous rally that we've had from all the way down there. It's sort of $6-7, and now we're trading at $30. We were at 35 up here. Now, the first thing I want to say to you is that this moment here was a classic textbook breakout. And if you watch my breakout video, the masterclass down below, you understand exactly what I'm talking about and why I'm pointing to these things. And I want to save you time because I know a lot of you guys have already watched it. Thousands of you have watched it, which is amazing, and keep sending me messages every day how it's changing your life, which is brilliant. That's exactly why I do what I do here. And what are we seeing right now? Well, every rally has a break. The way I picture that is I go hiking with Winston. He loves to go up the mountains. He's really quick. He's quicker than me, right? 4 pulls, lower gravity. And then he gets to the top, and then what happens? He's like, and then he wants to have a snack. He wants to have a nap, and he wants to enjoy the view for a bit. And that's basically how rallies go. So this one here, up, goes a little bit sideways, and then we're dipping a bit. And that's actually normal. But so far, the support here is holding, which sits at $28. So as long as that holds, all is well and good. If it doesn't, then, you know, we might revisit a much lower level of 16 bucks or so. So what would I wait for? I would wait for the next breakout. It's going to look very much like that one here. This was a second chance, by the way. You always get a second chance. But if you miss the second chance, there will also be a third chance to get in on that. So do I buy right here, right now? No, why not? Late to the party. And it's not polite to be late to parties that much. But consider this, there is another quantum pioneer out there that's taking a completely different approach. They're called D-Wave Quantum. And while others are trying to build general purpose quantum computers, D-Wave is specializing. And their specialization is optimization problems. Now, their metric card tells an interesting story. Cash flow is F, that's horrible. Growth is C, that's okay. Price momentum is B, so the stock hasn't rallied as much as I and Q. Profit, health, and relative value are both an F for fail. So what makes them special? Well, they're solving real-world problems right now. They're basically making companies' operations more efficient. For example, there's a company called Patterson Food Group. They cut their scheduling time by 80%. So they reduced a week's worth of work into just one day, and they're doing the same for other companies. Now, the risk is that all of these companies are spending a bucket load of money to build this stuff. So they have high debt, high cash flow like this one does. So let's have a look at the chart then. The ticker symbol is QBTS. D-Wave Quantum Inc. is the full name. QBTS is the ticker. Sounds like a boy band, doesn't it? Korean boy band. And what do you see here? Well, let's see where the actual breakout occurred. The real breakout happened here, which was at about $2.30 or something like that. And if you'd bought here, you'd be pretty happy actually still. Well, you would have doubled your money at one point, and now you're coming down a little bit. Are we coming down tremendously? Well, again, we're kind of hitting the same lows again and again and again, and that's sort of okay. That's kind of consolidation, like the same sort of exhaustion analogy that we're looking at here. Real support still sits at $2.50 down here, so it's possible we come back down there and we get another opportunity. But look at this. Volume is wild, even though we're selling off, and I don't love that. I want volume to be low when we're selling off, so there are a lot of people selling. There's a lot of trading going on there too, but there's a lot of people selling as we're selling off. So it looks a little not like the sweet entry point right now. So I'd watch it. I'd watch out for the next breakout opportunity like the one we had here, and it'll come. It always comes, and put it on your watch list, and that way you'll know what to do. And if you want to know how to find that breakout point, you do what? Exactly. You watch the masterclass down below. In fact, you could do that right now if you like. But there is a third approach here, and this is another company. It's called Rigetti Computing. And they're pioneering multi-chip quantum processors. So think about it as building a quantum computer that can scale up like, you know, you can plug extra RAM into your PC, right? It's basically that. You just add another chip, you add another chip, and you add another chip, and you can just scale that way. And what does their scorecard look like? Cash flow is a D. One of the better ones we've seen so far. Growth is a C, price momentum is an A, so it's another one of those to the moon jobs. And then profit, health, and value, again, both Fs for fails. And you're going to see that across any industry that is before the real commercialization period kicks in. So they're building, they're investing, they've got some money coming in, got some cash flow, they've got some clients, but they're not yet at mainstream. That's just the place where we are right now. And they're about to launch a computer that has an 84-qubit system, which is better than the IonQ system, at least on paper. But what really caught my attention is that they're also working with NVIDIA to make quantum computers more reliable, similar to how your computer's error checking prevents crashes. So they have this AI integration to automatically calibrate their quantum systems, making them more stable and more easy to maintain. Now, there's one red flag here, and that's that their revenue is actually decreased by 19%, which is not really what you're looking for in a growth company. But the NVIDIA collaboration could be a game changer just in terms of probably access to financing, because NVIDIA might throw them a few $100 million if they need it. And just having that knowledge, that power, those brains behind you, you can call for help, will help them overcome any tech challenges that they're likely to find. So the ticker symbol here is RGTI. And you can see a similar pattern to INQ here, right? So where was the breakout? Can you spot it yet? Have you watched the masterclass? It was this one here. That's it, where the volume broke out massively there. There might have been one here, actually. You'd have to zoom in a bit more on that. And then we're just sort of hitting the $7.50 resistance line here, which is always an important piece of information that you can get in Trade Vision, which, again, you can get yourself a week's trial to and check it out. And therefore, again, I don't think it's the moment to buy it. I think we might go a little lower. We might then rebound. But what you want to see is rebounds on huge volume. And I'm liking this a little bit better because we had a lot of volume on the 2 rally days here, that one and that one. And then we had a lot less volume on the sell-off day. And that's kind of like, okay, this looks actually a little bit more stable. So this actually looks like there's madness going on in there than in the previous stock. Now, one important thing is that there is a different way of tackling quantum computing. And we're going to look here at Raytheon Technologies, which is a defense giant, and they're taking a more strategic, sort of methodical approach to quantum computing. Think of them as the tortoise in this race, slow and steady, but with massive, near unlimited resources. So let's look at their scorecard. Cash flow, C. Growth health, C. Price momentum, C. I like that. That means the stock hasn't gone up that much. Profit health, C. Relative value, D. So this is looking much better than, a little bit less risky than these other guys, right? So what's good about Raytheon? Well, they're not trying to build quantum computers from scratch. Instead, they're partnering with IBM to apply quantum computing to defense applications. And they've already secured 2 quantum computing patents this year focusing on national security applications. Because if you think about it, you've got these computers that are septillion times more powerful than everything else out there. Well, imagine a hacker, right? Where they're going to go first? National security, right? So you can imagine that the government, the NSA and the CIA and all these guys are going to be like, we need this now. And by building an application on top, software on top, you could potentially make a lot more profit, and you have a lot less risk because you don't have to physically build these chips. You can just buy them in from whoever turns out to be the winner from the guys who were just talking about, and you're just running a service, which is a little bit like a sort of Palantir approach to AI, right? They're not building AI chips, but they're coming out as the winner from the whole AI race because they're able to leverage every LLM, so every ChatGPT and everything else out there without having to build it. And they're running it on what? The fastest chips out there at the moment, which at the moment is NVIDIA. Maybe in 10 years, it's a different company. It might be a quantum computer. So I like these software companies because they're just sort of going, we're going to be the shovel in this gold race. And no matter who finds the gold, we're making money because we're selling shovels. And Raytheon is profitable, right? Now, they're not growing that fast, 17% a year, not massively explosive, but, steady, sustainable, and that could significantly improve. So shall we have a look at that stock? The ticker symbol is RTX. And how does that look to you? Well, if you watch the masterclass, you will now spot 3 breakouts, actually. And one was here with that volume there. That was actually another one. This was a third. Did we have a fourth? Arguably. This would be sort of a second chance fourth. So we had quite a few opportunities to buy this, right? So if you've been paying attention, you could have bought this at $84. You'd be up very nicely, 30-40% right now. But I don't want to make you feel bad for missing stuff because that's not the point. The point is that you can foresee these in the future. And what are you seeing right now? Well, you're seeing a stock that's done very little since August. It's basically just gone absolutely sideways. But it's actually a little bit worse than that. And some people draw these. Have you seen these? They call them shoulders. So that's a shoulder. If I could write shoulder. What happened there? Shoulder. This is the head. And this is the other shoulder. And when you then drop below the armpits, somewhere here, then bad things happen. And we've done that now. So we're dropping below the armpit. And armpits are smelly. So this is not a very, very positive setup. So what would I therefore do? I'd wait. I'd wait till we move above the 50-day moving average line again. This is the yellow line here. And we want that line to not slope down, but start to slope upwards again. We want volume to start exploding again. And that's the moment where we make money, because this stock might go sideways for another year. What's the problem with that? Well, say you make 0% in that year because it goes sideways. The S&P might go up 25% next year, right? In which case, what happens? You are 25% poorer. That's the problem of bag holding. And I'm up 200% this year. So what happens? I'm 200% richer. You are actually 200% poorer. It isn't a zero for you because relatively, you kind of compete with my dollars, right? I now have 200% more dollars. So what's going to happen? I'm going to outbid you on the holiday and the flights and the nice lifestyle and so on. So stuff gets more expensive. The real inflation rates are multiple of what governments obviously admit, especially when you buy more luxury goods. And that's the problem. Bag holding is insanely expensive. It isn't a zero. It is a huge, huge, huge minus, like 30% just this year for the S&P 500. And a lot of people have done a lot better than that. So again, a wait and see approach, and we're looking for the breakout when it comes, if it comes. It tends to come at some point. But I'm going to tell you one more thing, actually two more things. Google is the one we started with, right? So we need to talk about Google and what they just done, the bombshell that they just dropped with their Willow chip. Google is an impressive company. Their scorecard reads as follows: cash flow B, growth health B, price momentum A, profit health A, relative value D. That's a pretty good set of letters. So what makes Willow special? Well, it's kind of like comparing a Formula One car to a bicycle. It solves problems in seconds that would take traditional computers thousands or billions, trillions, septillions of years to solve. And Google is using this to tackle real-world problems in drug discovery and also in energy solutions already. And, well, they're a very profitable company. They have very good margins. They've been around for a long time. They're sitting on 20 billion of cash. They basically have a blank check to fund quantum research as long as they need, while pouring in money from their traditional business. So it isn't a pure play quantum company. And Google is in a position to afford to play the long game, which might mean that eventually they actually come up with a better product. So how does it look as a stock right now? Well, actually, I think we flagged Google as a breakout in here. There she is. Yeah, I think we did. Exactly. Here was the breakout. So we send these emails out twice a day where you get the breakouts of the day. And this was one that we called 2 days ago as a result of the Willow news. And you can see again here the big volume, the huge breakout up above. And then you always get a little bit of profit taking. And then, to me, this looks very positive. So would you get in on this at this level? You're a little bit late, not massively late, but a little bit late. Resistance sits at 200. So I think this is probably one of the safest ways to get exposure to quantum computing. We took out the previous highs here just about. So we might be lingering around the 190 for a bit and then the 200 for a bit. So it isn't going to get you the crazy moves, but I think Google, they get AI right, which they're about to, they get quantum computing right, and there could be, adding a couple of $1 trillion to their valuations very, very easily. And then what? Best of all, well, there is, of course, NVIDIA. We can't do a video about chips without talking about NVIDIA's. And they are not just participating in this quantum revolution, but they're helping everyone else build better quantum computers too. And if we look at the scorecard, just to start with here, cash flow is A, growth health A, price momentum B, profit health A, relative value D. So it's an amazing card, right? And what makes NVIDIA unique here? Well, they're like the company that's selling the pickaxes. A little bit what I said about the shovels earlier. They have a platform called DGX Quantum Platform. So they're providing tools to other quantum companies so that they can succeed. They're working with companies like Rigetti to make quantum computers more efficient. So they're basically saying, we're the king, you guys do the dirty work and bring us what you find and then we'll monetize it and we will gobble you up. And it's a good approach. It's what you can do when you're that big, right? And it's a very profitable company, 100% revenue growth. They're insanely profitable and debt-free. So the approach is very, very clever. Regardless of who comes out on top with quantum computing chips, NVIDIA is positioning themselves to be the kind of essential infrastructure provider here for the entire industry. So very, very smart approach. It's a lower risk approach as well. So if we look at the stock chart here for NVIDIA, what do you see? Well, I've got in blue here the breakouts that you could have spotted had you watched the masterclass. So please go and do that right here, right now. And then I've got my uptrend here from the last rally, and we're a little bit below that. We're also a little bit below the yellow 50-day moving average line. And that's saying caution. That's saying be careful, apply risk management, and wait for things to improve. So right now, We're in an exhaustion phase, but the exhaustion phase could very easily turn into a sell-off phase if something happens. Now, I'm generally very bullish on NVIDIA, but in the short term, you got to watch for these things because risk management is really what it's all about. So what have we done here? We've examined 6 companies, we've put it all together, and we now understand what quantum computing is and where the opportunities lie. So if you got some value out of this video, you do what? Yes, you share it with a friend or a golden retriever, and before you do anything, sit down, watch the masterclass, learn those 4 secrets from Wall Street to really be able to spot these breakouts before they happen, and you can apply it to every single company that we just looked at today. And I love you for watching. I love you for tuning in. Keep learning, keep building wealth. Financial freedom beckons. All the best. Now, this is important. NVIDIA and Tesla just signed a groundbreaking billion-dollar chip deal that's about to transform them both. And the market hasn't really grasped it yet. And that's crucial. A potential $10 trillion opportunity for these 2 stocks. And